where are central banks piling their money into right now? Gold, precious metals. There's a reason why. So we're seeing them head into that space. And, when you look at, real estate, the bond market, people are going to head to these high torque opportunities because I believe precious metals is cornered. It's like Muhammad Ali and Joe Foreman's got him in the corner, has been working on him for rounds. So if we stay in a high inflation environment, what's going to perform? Hard assets, gold, silver, precious metals.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a great discussion lined up today that I'm very excited about. Today, we're fortunate to have with us Thomas Parilla, Roger Rosmus, and Dan Stuart, all joining us. Thomas is the president of Parilla Investment Group and part owner of several producing gold mines. Roger is the founder and CEO of a junior resource company, Goliath Resources. He has more than 25 years of investment banking experience in the public and private sector and has acted as the lead on over 30 M&A transactions. And Dan is the president and CEO of Juggernaut Exploration, also a junior resource company. Dan has more than 20 years of experience in finance focused on natural resources, and he's closed on over $100 million in funding for both public and private corporations. Gentlemen, thank you so much for joining us today.
Hey, Gary. Thanks for having us, Gary.
Yeah, thanks for having me, Gary.
Yes. All right, Thomas, let's start with the gold price. Since breaking out of the 4-year consolidation zone between 1,600 and 2,000, gold's been holding over 2,300 now for the last several months. Admittedly, it's been a bit volatile during this time. That said, in your analysis, where do you see gold going over the next 1 to 2 years? And do you recommend investors to buy every dip, and why?
I would absolutely advise people to buy every dip, and I'd probably buy every dip for the next 5 years. We're just at the beginning of a cycle that's beginning. Money managers will begin to rotate into precious metals next, and then you'll see the retail buyers come in after that. This is just the very beginning of it. I think people are beginning to understand you've got a problem with the United States debt, and it's getting worse by the day. The dollar is held up very strong, but it's only because it's the last one standing. And I think you're going to see major issues coming between the United States and the Japanese currencies. You're seeing a lot of volatility in that even this morning. But I think when people begin to understand what's really going on with the economy here in the United States, our markets do not represent what's really happening in the economy. I mean, I'm seeing an absolute meltdown in the commercial real estate market. I saw a place this morning just come on the market in San Francisco at a 90% discount. The owners paid $62 million for it in 2018. This morning, Starwood picked it up for $6.5 million, and it's a beautiful place. It's not a shack. It's beautiful. I'm seeing that in every market around the country. Now, that has to go down. Then the loss gets defaulted down to the bank, and the bank has to eat it. They can't just push those things all off a balance sheet, which is what they've been trying to do. So sooner or later, you're going to have a regional banking issue problem, and that's going to force our Fed to turn. And then you have to worry about asset bubbles, because if they turn pump liquidity in, then you have to worry about what happens to the stock market. Does the stock market then go, to 42,000 on the Dow? And the part about the stock market I think I'd be concerned about would be complacency there. Right now, everyone's so happy with the returns they're getting. But if you look at the overall breadth of the market, it's very tight. I mean, the top leadership is really carrying the Dow. So I don't think people are used to seeing those kinds of dips come in the stock market like we are familiar probably in the precious metals. So you get a 10 or 20% drop in the stock market, you may see some real problems, nationwide as a little bit more of a panic sets in on kids. But I think we're in good shape for the gold and silver market. I think we're set up perfectly. Rates will start to go in our direction. We're getting closer to the presidential election. I would expect you to have just absolute chaos down here the last 3 months. That's a kind of a perfect environment for precious metals. So I think we're set up very well.
So, Roger, you have an investment banking background lasting almost 3 decades. What edge, if any, does that background give you as you lead Goliath with gold at the starting gates of what looks to be a new historic bull run? We can't hear you. I think you're on mute. Roger.
Being polite. Well,
Let's start over. I'll re-ask the question and I'll edit that whole thing out.
You bet. Thanks.
Okay. Roger, you have an investment banking background lasting almost 3 decades. What edge, if any, does that background give you as you lead Goliath with gold at the starting gates of what looks to be a new historic bull run?
Yeah, I would say quite simply the ability to raise capital in bad markets as well as good markets. So anyone can raise dough or capital during the good times, and the key or really the test of time is the ability to raise cash when when things are not so hot in a particular market. So I'd say that would be the key point that I bring to the table is access to capital.
Dan, I understand that Juggernaut's projects, in addition to Goliath, they're located in the Golden Triangle. Would you share what is so fantastic about the Golden Triangle from a geologic and investment standpoint? And would you point to some other mining companies that have experienced successes nearby?
Yeah, thanks, Gary, for that. And thanks for inviting me today. Much appreciated to be here. Northwestern British Columbia is mapped within the top 5 to 10 packages of rocks left on planet Earth by the senior miners that remains underexplored. And the reason for that has been snow and ice. So due to climate change or weather change patterns, whether fancied or real, we're seeing rock being exposed that hasn't been seen by the eye of man or ever by the eye of man in 20,000 years, roughly is what the BCGS, the British Columbia Geological Survey, believes. So you've got this world-class package of rocks, this terrain that is underexplored, that has had some very historic discoveries, one being Eskay Creek, which was a discovery of VMS. It was the world's richest gold mine for a decade. They built an airstrip literally in the middle of nowhere, and they took all the seats out of a DC-10, one of my favorite old airplanes. They flew it in there. This was in the 80s, and they would load gold doré onto that plane and fly that plane out of a remote airstrip to YVR to the Vancouver airport, load it all in Loomis trucks down to the port here in Vancouver, and then it would get shipped off to a smelter. Barrick operated that gold mine for a decade, and it was the most profitable gold mine on planet Earth for 10 years. Wow. So there's these world-class deposits up there, and geologically, what's happened in northwestern BC is there's a thing called an unconformity. So just to keep it very simple, coming from somebody who's not a geologist, but has certainly raised a lot of money chasing geologists' ideas. How it's been explained to me is there's a gap in time. So you're going Jurassic, Triassic, and then boom, there's just millions of years missing. And then that next time zone will pick up. And what that does is it's created a deep feeding structure, like plumbing in a house. Think of your plumbing in the wall, going all the way down to where the minerals come from that are still in liquid form, right? And that allows them to come up. Now, what's so great about Nevada, a very famous historic place, mineral rich, gold rich, is that there's an unconformity there too as well. So you've got these plates being pulled apart, which has created all this, a conduit for these fluids to come up. The same thing has happened in northwestern BC. So you've got this extraordinarily mineral rich region, world-class discoveries, and Roger, Goliath, and Juggernaut have been active first movers into that region, staking up key terrain before anybody else has.
Wonderful. So, Thomas, what specific non-price trends or developments in the gold mining industry do you believe investors should be aware of right now?
Non-price trends. I guess you pay attention to all the geopolitical issues going on in the world. Those are kind of things where you can wake up just, tomorrow morning and something happened in Israel, something happened in the Ukraine, maybe something happened in Africa. So you've got a ton of geopolitical issues there. And the other thing, non-price would be the U.S. election. I mean, this presidential election, I don't think people are prepared for what's coming, but it's going to be a mess down here. And probably no matter who wins, come the next day, you're going to have 50% of the country upset and angry and thinking they got ripped off. And all those kinds of environments, anytime you have an environment of uncertainty, it drives people to something that is certain, gold and silver, true currency. And I think you're seeing that in China. When China ran into a lot of issues over there with their bank problems and their real estate problems, what happened? Individual people started buying a lot of physical gold. There's some discussions now that the Chinese may have brought in as much as maybe 2,700 additional tons of gold that they're not reporting yet. I think you'll see that in the United States as people begin to, have a question about this, how society is being run. Are we happy with our presidential candidates? Are we happy with the way they're elected? To me, it's turned into almost a Hollywood movie. I mean, we don't look at a guy's resume anymore and ask what they did in their lives. Do you deserve to be the commander in chief? It's just a TV show, and they gloss them up and they tell you what you want to hear and see if they can get elected. So I think all those things come together, and those all point to gold and silver, something that gives you a rock, a certainty. It's not a fiat currency. It's a physical metal in your hand. So I think all those things lead right back to precious metals.
On the geopolitical side, with the ratcheting up of war drums with Russia, they recently blamed the United States for a drone attack inside Russia. Congress recently passed a law making it easier to conscript young American males and females to the military, and there's other things going back and forth, including Russian warships, outside of Cuba, 90 miles from the coast. So how concerned are you with what's happening geopolitically with Russia and the fact that the war drums are going, are escalating and not coming down at all? Nobody's willing to talk peace here.
Somehow or another, we've always been able to keep a lot of that stuff in the back channels where we don't actually go toe to toe. The bigger concern I would have would be Israel and Hezbollah, because they're both frothing at the mouth, and it would just take a match. And they're going to, if they go up, Syria goes in, Iran comes in. I think Egypt probably jumps in. So you could have a real problem in a second. Over in Ukraine, I just have a feeling somehow or another we'll pull back from the brink like we always have, and somehow or other the U.S. and Russia will come to some kind of an agreement where they'll settle things down a little bit before it gets out of hand. But you're right. I mean, you have one problem over the Baltic Sea. One plane gets shot down, one accident. When you put yourself in that kind of situation, you're asking for a problem. So I would say, Russia, Ukraine's a real concern. I would say, if you look at it from a world point of view right now, the Russians and the Chinese are just running all over Africa right now. The Wagner Group is in just about every country over there. There's an undeclared war being fought there, and they're fighting over commodities, copper, cobalt, silver, gold. The amount of gold that's being flown out of Africa under the radar is a massive amount. We have a big problem in the United States taking gold out of the Congo or the DRC if it's a conflict. The Russians and the Chinese don't care. Especially the Chinese, they'll load it up and take it, as much as they can get. So the world's definitely changing, but somehow or another, we've always had a way of pulling back from the brink. And I think we'll do the same thing in Russia and Ukraine. I think we'll settle things back down.
Well, that's a really good segue. Roger, in recent years, we've been seeing an increase in social unrest, war, inflation, debt, among other significant events. The BRICS nations, they're moving in the direction of de-dollarization, and currently they've de-dollarized only on the margins, but they're putting systems in place to do that on a larger scale. There's the growing gap between the rich and poor. It's growing very fast. Central banks, they're adding gold in record amounts, levels we've never seen. Is all of this an indication of something taking place in the financial system that's been in place since World War II? And what do you see as the likely result, and what role do you think gold is going to play in all of this as it moves forward?
I think in a nutshell, it's the big reset in play. And certainly gold has got a long way to go from here. Precious metals, as you mentioned, central banks and so on, BRICS, not just gold, silver, but other type of commodities. So these guys they're playing with a long-term plan here. It's the long game, And ultimately, these fiat currencies, I think, will, they're not going to succeed at the end of the day. They need to do something. And obviously, gold is where you want to be.
Yeah, I agree. Dan, as the price of gold continues to go higher, the majors, the Newmonts, the Agnico Eagles of the world, their currency, which is their stock, it likely goes up in value. As their stock or currency goes higher, it gives them more capital to play with. At the same time, gold supply is going to be under pressure due to the increase in price, which is revealing more buying pressure. And the majors will likely be hungry to acquire more supply. So in that scenario, they'll likely be looking at, well-positioned juniors for acquisition. Do you see this playing out in this cycle? And are you anticipating a large M&A cycle taking place this time?
Yeah. Thanks for that question. I think that we're headed into a record bull market in precious metals. And in the M&A activity arena. Really, when you look at it from a macro scale, every mine is a depleting asset. So every day, more and more is taken. And these seniors, mid caps and small cap producers are in this cycle of having to replace those ounces on their balance sheet. Right now, what we've seen with gold at, call it for all intents and purposes, a record high in every currency on the planet, including the US dollar, call it 2,300 there on average, and silver trading over $30 an ounce for the first time in 12 years, which I think is a key technical indicator that we've entered a protracted bull market in precious metals. Their balance sheets are being cashed up right now significantly. Now, their input costs have gone up somewhat, but they're just becoming completely cash rich, and they're going to go on a shopping spree. We've seen some of it take place. They're being much more cautious this time around because those management teams were crucified in the last bull run. They went out and paid way too much for assets that weren't proven in the ground. So we kind of had to go through this cleaning up phase of them fixing their balance sheets, installing new management teams. And this time around, they're cashed up. They're in a stronger position. And I think they're going to be more selective of groups that have real discoveries. And they're going to pay up for those. We saw Newcrest come in and purchase Bob Quartermain's Pretium in northwestern BC, just north of us. And that was for $2.8 billion. That was for the remaining shares of Pretium. They were already a shareholder. So that company had graduated from the TSX, which Roger and I are both listed on. It traded in the pennies at one point, and it graduated to the NYSE and into a $2.8 billion purchase. Those are the opportunities that are really here in front of us today. And in turn, what happened after that? Well, Newmont came in and purchased Newcrest in a multi-billion dollar deal. And Newmont is now the largest landowner for mineral resources in northwestern BC, in the Golden Triangle. We've got Hecla right beside us. Mm-hmm. South 32 out of Australia. I mean, the list just goes on and on. All the seniors are either there or trying to get a seat at the table.
That's amazing. Thomas, are we at the point in the cycle where institutional buying begins and starts to drive prices higher to the next level?
Yeah, I think at the very beginning of that, we're just starting now to see them stick their toe in the water. And that's usually the beginning of it. And then they'll start to add to their positions. And then the very last one will be the retail buyers coming in. But I'm absolutely seeing the beginning of a sector rotation taking place. And there's no doubt about it. I think some of them are taking some of maybe the tech gains that they've had in their funds that are getting a little frothy and maybe getting rotated. But I would say we're at the very beginning of that happening. And I would suspect as you go into the second, the third part of the year, you probably see that pick up. The closer we get to the election, I think the more they'll load into the precious metal funds.
Roger, there's been a shortfall of investment in mining for quite some time. Dan just touched on some of the reasons why. It's been going on in general for over the last decade plus. What do you see as the impacts and consequences still to come because of that investment shortfall?
Well, you're seeing a lot of companies with fairly decent assets that just can't get funded, and what we need to see more of is success stories that will attract this capital that's been sitting on the sidelines for quite some time, because it has been very, as you mentioned, it's been a very tough market. Sentiment has just been terrible, but we are seeing, certainly from my point of view, we're seeing a glimmer here. Things seem to be changing. I've been doing a couple conferences earlier this year, and people are a little more upbeat, compared to the previous years. So, I'm optimistic that things will continue to improve for us on the junior side here, and with all the seniors making just tons of cash, where with the where gold is currently trading at, they're going to have to do something with that cash, and ultimately at some point, people will see that their investment in these seniors are somewhat maxed out, what have you, and looking for that next tier of companies. So we're seeing a little trickle, that waterfall of cash capital coming our way, but we haven't seen like the big waterfall that I do expect we'll see at some point in 2024.
But you're looking for that waterfall to come. You're expecting that waterfall to come, maybe based on the gold price as it hits various thresholds or something else.
Sure, yeah, exactly, and more M&A activity. So, and just the success of projects. We just saw Skeena Resources just secured $1 billion Canadian to advance that project again, which is just to the north of us here. So, from a geopolitical standpoint, and I guess just from a mineral-rich environment, everyone's pro-mining in the area, and there's a lot of investment going on in the Golden Triangle in particular. I guess there's a number floating around, sort of $5 billion has been completed M&A activity in the area to date. Obviously, not as much recently. Obviously, with the Newmont buying Newcrest, that certainly is a good sort of a tick in the box, so to speak, to where we're situated. And in addition to that, a number of the CEOs, to Dan's point, at the BMO conference, I guess it was earlier this year, they've specified Golden Triangle as a key focus of growth for them. And again, their reserves are running out. They need to replenish those things. And where it's the juniors like us taking the risks, shareholders taking the risks to find that next mine that's going to satisfy their requirements.
Yeah, I appreciate that. So, Dan, the world has loved financialized and growth assets for decades. As inflation and interest rates were attained and globalization and dollarization were the orders of the day, all of that seems to have changed. And with all of that changing, do you see investors altering their playbook slowly at first and then likely all at once, where they come back to hard assets, including metals and miners? And what will that mean for those that are well positioned?
Yeah. Thanks for that question. That's a double loaded barrel. You can kind of go either way, but yeah, I mean, we had record high interest rates in the 80s, and the bond market was something special then, and we've seen 35 or 40 years of rates doing this, and money printing, and the central banks really taking on a Keynesian point of view, right? Flood the system with liquidity. So, that's created tremendous wealth on trades that weren't really that hard to do. So think about it. If you owned a house, at least here in Vancouver, anywhere metropolitan in Vancouver, you became a millionaire. You said own a house for a couple $100,000. So, we saw the markets overall really have this general lift. Liquidity, big money needs a big home. So it's going to go into three key places. We're going to see it enter into real estate. We're going to see it enter into the bond market. And we're going to see it enter into the stock market. And so we've seen that over the past 35, 40 years. And now we're kind of getting a bit of a taste heading in the other direction. So, really, when you look at that, how long in a high rate environment will we remain? But I take a macro view of things. And I say to myself, okay, I'm a big investor in precious metals for a number of different reasons. One being that name one central bank that buys Bitcoin. One. None. Maybe Ecuador, because they're actually mining it. So, well, they're actually not mining it. They're actually transacting it. So they've actually stolen the word mining, right? And whenever they market a Bitcoin, it's always a gold coin with a dollar sign, right? So, where are central banks piling their money into right now? Gold, precious metals. There's a reason why. So we're seeing them head into that space. And, when you look at, real estate, the bond market, people are going to head to these high torque opportunities because I believe precious metals is cornered. It's like Muhammad Ali and Joe Foreman's got him in the corner, has been working on him for rounds. So if we stay in a high inflation environment, what's going to perform? Hard assets, gold, silver, precious metals. Now, what if we don't stay in a high rate environment and rates actually come down? We do have a soft landing. Well, guess what? The US dollar is going lower, and they're going to be printing a lot more of it, as we know. So what's going to happen? Gold's going to rally. We've already seen a taste of that rally, which is the talk of rates going the other way. You've seen gold touch 2,400. So we've really got precious metals in a corner here, like Muhammad Ali. He's just waiting. He's been getting peppered kind of left and right. He's returned a few jabs. But I think what we're going to see is a real change in the tide here. And great groups, we're an explorer. We're onto a discovery. Roger's much further down the road than we are. But you're going to see a lot of really great groups out there do well. And one that I would have to give a plug to, a big shout out to, would be Crescat Capital. Kevin Smith, Tavi, and Quinton have just done a phenomenal job. And for investors out there, being a licensed broker, I can't give advice on this, but I would certainly contact Crescat. They're great. They're great at investing in this space.
So I just interviewed Tavi last week, and it was a fabulous interview. He's brilliant and so articulate and amazing. And then your analogy, your boxing analogy, I love it. Thank you for sharing that. Both Roger and Dan, I'd like to ask you both this same question. It has to do with the derailment risk to this next gold bull run. What do you see as being the greatest risk to derailing this next great bull run? Roger, let's start with you.
That's a good question. I'll have to think about that, but I don't know. I think it's all the boxes have been ticked. I just don't see it happening. The way things are going, just the whole macro side of things, I draw a blank.
Okay. Dan, do you have any insight into that question? Is there something that could possibly derail this?
Yeah, thanks for that question. There's always a risk. There's a risk to everything now. I think that the bull market can't be stopped. And we've seen that in the price of the metals. Now, the LME, they've got all these games they play on the floor with naked contracts, short selling, things that we already know about. And they've been trying to keep a cap on precious metals because it's really the anti-fiat currency. The higher they go, basically says what I'm working for and earning and saving is worth a lot less. And we're seeing that now with mass inflation. They can't really hide it anymore. So, it's almost like, you're slowly pulling pieces off of something that's great, that's going to rise no matter what. So they try to slow it down with Bitcoin. Well, let's grab this crowd and say that this is a real true store of wealth, and then they'll throw paper contracts at it. I think it was when Trump got elected in 2016. There was 120 fake paper contracts that traded for every one physical ounce on the COMEX. Prior to that, the night he won the election, I think gold jumped to about $175 an ounce. By the time the market had opened, it was only up, I think it was around $50. And what they did is they created, I think it was 75 paper contracts in addition overnight to pull a big to taper it down. So really the only thing that can stop precious metals now is games. And they're going to play them. Right?
How long can those games be played though before, I don't know, before math, wins out?
Well, we're at math right now. It's 1-0, but the cork's going to come off the bottle of champagne here at some point. And look at China, the world's largest gold producer, the largest gold producer in the world. They don't export a single ounce, and they import. They're importing. So if you look at the Shanghai Gold Exchange, physical gold is at least $100 higher per ounce in U.S. terms.
Yeah.
You have to have physical delivery, I think, within 3 days there. So, look, go out and try to buy 3,000 ounces of gold, physical gold, 100. See what price you pay for it, right? So there's a price that's on the screen, then there's a real price you pay for it. And that kind of comes back to the seniors. You can get ounces very cheap in the ground, 50, 20, 30, $75 an ounce in the ground. And then you come down to the smaller explorers like Roger and I, and you can get them even cheaper than that. And they might even be safer. They're locked in the ground. It might be the best vault out there, really, when you think about it. So when this wave comes, stories like Goliath and Juggernaut are going to be what's referred to in the investment community as high torque opportunities, right? Where you go from 10 cents to $66 in 9 months. Like Eskate Creek when that discovery happened, right? So they do happen. They're rare, but it looks like we're both onto something very special.
Well, gentlemen, this has been a fascinating discussion. Before we wrap up here and I ask you all our final question, I want to point everyone who's listening over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and every single expert interview, just like this one that we conduct. It's all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed this conversation with Thomas, Roger, and Dan as much as I have. Please let them know. Hit the like and subscribe button and leave a comment below the video. All right, it's time for our Golden Nuggets segment. Gentlemen, let's turn to the mining equities versus the metal itself. There's been a strong debate over whether the gold miners are undervalued versus gold or if they're fairly valued, and their lack of substantial rise since gold's breakout is evidence of the lack of belief in the breakout itself. Do you see the gold equities as being undervalued and reflecting an opportunity for investment, and why? Dan, let's start with you, then Roger, and then Thomas.
Yeah, thanks, Gary. I believe they're significantly undervalued all the way down the chain. So, and it's usually the flip side. The market's kind of topsy-turvy this time around, but, usually it's the miners lead the price of the metal. And this time, it's the flip side of that. We've seen the price of the metal lead, and the miners are lagging in that valuation. So they're undervalued. What we have seen, so there's a lack of students going into geology, into hard rock geology specifically. Mm-hmm. There's a lack of drillers and new guys buying drills to go out and drill. There's a lack of helicopter pilots that even know how to move helicopters. There's a lack of exploration geologists that go out and bang rocks and look for new discoveries. Every mine on the planet at some point was nothing. It was just a discovery. So there's a lack of people doing that. There's a lack of people out there manufacturing the milling equipment that will put these things into production, how to run that, the engineers, the liberation of the metals through the process of actually liberating the metals, the construction of the mines, the operating of the mining equipment, the boards of the public companies. capitalization of those public companies. The chain all the way down has been just constricted for well over a decade. Well, the price has been rising and the lack of discoveries has been dropping. So, a disconnect in the market can only last so long. So that rubber band is being pulled. And when I think we see that snap back, companies that are well run, that have real discoveries, that have been, kind of like certified by Christie's auction when you get a Crescat or an Eric Sprott or a Rob McEwen, like Roger has all three of those. I have one of those Crescat, very thankful and grateful for that. These ones that have been kind of independently certified by a Christie's auction, I think are going to have very big moves. So, they're undervalued. And
Dan, in your scenario, do you see a speculative blow off top near the end of the cycle where anything with the name gold or silver in it just goes crazy for a period of time?
Yeah, I think you always in speculative bubbles have these blow off tops. I remember I bought my first mining stock pyramid. I think that was 88 or 89 with newspaper money. My mom worked in the brokerage business. I started when I was 19 years old at Yorkton Securities. I'm 49 now, about to turn 50, so I've seen 29 years of this business. I've been through quite a few precious metals or mining runs. It'll have its speculative blow off for sure, just like they all do. It's coming.
Yeah, I appreciate that. All right, Roger, what's your take on this? Are they undervalued, overvalued, fairly valued? What do you see?
I would say undervalued currently at this time. Through the full spectrum of the seniors all the way down to the juniors. However, I do see a change, as I've mentioned. This waterfall. The seniors are making a lot of money right now. Wait till they start announcing their quarterly results and dividends or whatever they'll be announcing in relation to what they're going to pay out or what that actual number is, which I think will get things more excited. And again, it's all about the sentiment here, where we've been sitting in purgatory here kind of for the last 5-10 years, where it's been difficult even just to get a bid on the story. But again, it's just all about having more success stories. Obviously, the price of gold going higher, hitting almost new highs every day here. It will turn. The sentiment will come back, and again, we're seeing it. And so we're hopeful that we'll continue to turn that ship around, and certainly Juggernaut and Goliath. I think we're in a super well positioned with the shareholders, obviously, to make some pretty interesting gains here in 2024. And again, assuming the drill bit returns what we think it's going to turn. There's been a lot of money spent on these assets, and we're super confident that that shareholder value will be there. And to Dan's point of having a high torque, that's what people want. Typically, they want like a 10 bagger. They want I guess depending on what part of their portfolio, what age, so on and so forth. But I'm not giving advice in any fashion. But it's always fun to have a 10 bagger or a 20 bagger in your account.
Yeah, you made me think about slowly at first and then all at once. It's kind of what I'm picturing based on what you just said. Thomas, would you wrap us up with that same question?
Yeah, I think when I looked at my first mine, gold was 1,050 at the time, and you talk about some of the games that have been played with the LME and COMEX. They've been playing at the same time, and what I found is they can't stop a move; they can only slow it in one direction. And that's what they've been able to do. As far as the mining stocks go, I kind of look at silver. A few months ago, everyone was saying, well, why is silver lagging gold so much? It was at 23. It's never going to go up. And all of a sudden, in a blink, it was 30. Same thing's going to happen in the mining stocks. They're lagging. Then all of a sudden, it's just going to be bang. I would say that you're heading into one of the great periods for mergers and acquisitions in the mining sector, maybe in the last 25 or 30 years. And the way it'll happen is you're going to have that one deal announced. Boom, Monday morning, there it is, and then it's off. And you're going to see a whole slew of them. The dominoes will start to fall. Historically, I think we're going to have a period now where years from now, this is going to be talked about in business schools. they're going to sit there and say, okay, all of a sudden the world changed. They went from paper assets back to hard assets, and people began to actually look at what they were buying, what the intrinsic value of it. And people woke up. I mean, guys that worked 40 some years in a steel mill woke up one day and said, geez, the government stole 98.5% of my purchasing power. I could have been accumulating gold and silver that whole time and hung on to all that purchasing power. And that's the wake up call. It's coming. We're going to have a great period. Investors should just do their research, spread their eggs around, diversify like they always should. But the mining sector is probably going to be the exact sector you want to be in. And I think you could probably spread your eggs around. But the Golden Triangle, it's going to be the hottest sector of the hottest sector. So that's where I would focus on. If you really wanted to look at exploration miners, that's where I'd go. And I think you're going to be really shocked at the size of the buyouts that will come in the next 5 years there. I think it's going to be historical.
Well, Thomas, Roger, and Dan, thank you for coming on to Metals and Miners and for being so generous with your time, your analysis, your ideas. It's been phenomenal to spend the time with you. Would you please share with the viewers any final thoughts that you want to leave with those tuning in, where they could learn more about your work and your mind, how they can connect with you? Let's start with Thomas, then we'll go to Roger, and we'll wrap up with Dan.
Yeah, anyone that wants to reach out to me on LinkedIn, they can reach out to me anytime. If they miss me, if I'm out of town, I'll make sure I get right back to them.
For Goliath, we've got a webpage, goliathresourcesltd.com. Emails on there, Roger at goliathresources.com. There's lots of YouTube content on our YouTube channel. People should do their own due diligence. Take a look at who some of the shareholders are. As we mentioned, Crescat is a common thread or denominator between Juggernaut and ourselves, and we've got Rob McEwen in the story, as well as Eric Sprott. So these people have already vetted the deal, so that's could give you some comfort as to whether you want to invest in a particular security, not just Goliath or Jugger, but just in general. I think is a good sort of tack to follow prior to making any investments in the junior space, because again, it's low probability for success, but we've been vetted by some of the best cornerstone, world-renowned mining people, and that should give some comfort, I believe.
And Dan?
Yeah. Thanks, Gary. You can follow Juggernaut Exploration on LinkedIn. For updates, you can follow us on Twitter too as well. We also have a website, which is juggernautexploration.com. You can sign up for our news releases and follow the company directly there. You can also join myself on LinkedIn. Dan Stuart is on LinkedIn. So social media, the website, or pick up the telephone and give me a call on my cell. And that number is on our website. I always enjoy telling the story and meeting new people. Thanks for your time today.
Yeah. Wonderful. I will put all of that information, all the links up on the video. I will have it in the description. So for everybody watching, go check everybody out. Go research. Go look into these companies. If you're watching, clearly you're in the resources space. You're looking. You're searching. These are two phenomenal companies, gentlemen. I look forward to having you back on Metals and Miners. Thank you for being here with us, and everybody else, thank you for watching.
Thanks, Gary.
Thanks, Gary.
Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and every single expert interview, just like this one that we conduct. It's all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.